Hello, everyone. Welcome to this session, and yet another Monday bringing you great content your way. It's me here, Matthew, with my colleague Edwin, and we want to speak about reprogramming your mindset, going deeper into what happens when you're in the life of a trade or during the life of a trade. Okay, what really happens, what biases come in between. That's what we want to look into today. Edwin, you can say hi and then we progress with what we have.
Hi everyone, and welcome to today's program. So as Matthew has mentioned, today we will be looking at 2 points. So the first point relates to outcome bias. So outcome bias refers to a tendency to evaluate decision based on results as opposed to the process. So when making decision, it's easy to look at the results without giving enough thought as to how those results came about. Because our subconscious as human beings is that we are tuned to believe that great outcome is born out of skill, while poor outcome is due to lack of skill. This is not the case. Now, if you look at this table here, if I was to ask you, Matthew, what if you have a very good strategy and you've entered into a trade, and that trade has ended up losing you money? And you have another scenario where you've gotten into a trade, you had no justification, there was no reason as to why you got into that trade in the first place, but that trade ended up losing you money. Which among the two would you rather have? Would you rather have a scenario where you have followed all the rules, but that trade has not panned out, it has actually lost you money? Or would you rather be in a case where you've just gotten into a trade randomly without any reason or without any research, but that trade has actually made you money? Which scenarios would you rather be in?
It's quite interesting. Quite interesting. I think I will answer that question in 2 perspectives. I will give you an educated scenario and the other one which is uneducated, right? So when I talk about educated is where I've gone through trainings, I've practiced a little bit, I know the rules. And the other scenario is where I'm just getting into the markets, I don't know much about it, and all I'm thinking about is money. Okay, so in the event where I've the educated scenario is this: if I've been in the markets and I know how to go about it and I have a trading strategy, then I had better lose implementing a plan. I would consider myself having entered a good trade, but of course the market, the conditions did go my way, because this is a market where you are looking into a random movement. You can just predict based on the patterns you can see in the markets. So I think I would rather lose while implementing a strategy or doing according or playing according to my plan, as compared to the event where I'm just getting to the market randomly. I don't know what I'm doing, but fortunately I make something. That is luck. Okay, so,
so unfortunately, by the way, for most people, they'd rather make profit whether or not they followed the rules, or in case, I mean,
So maybe
you need to have rules in place, but you will notice that most people would opt for a case where you've had a trade ending up in profit, whether or not you follow the rules. Very few people would select a scenario where you follow the rules, but at the end of it all, that trade has not panned out.
Yeah, I understand. I understand where I understand where the difficulty is coming actually in explaining this, because you see, it's really a thin. Let me say, it's something not quite easy to explain, especially to a trader who has not been in the market for quite some time. Yeah. Yeah, you don't want to be random in these markets. You don't want just to get in and think of what can I do? What type of a trade can I place? And the market favors you without any kind of a plan. So, but then, of course, you're looking for profits. So you've got into the market, you used a trading strategy, you've not gotten anything. But someone has not even used a trading strategy or even a plan, and they got something. It becomes very difficult to explain why it's better to have a plan. And just the simple reason is this: consistency, because you don't want to be random, right? You don't want to just get in today, you've getting profits, tomorrow you don't know what to do to get the same profits. You want something that you can repeat over and over, something that you can repeat over and over, and you know the signs that you're looking at for you to get into the same kind of a setup. So I think one thing which is appearing severally here is rules, following rules and breaking rules. And based on that outcome bias table that you have there, Edwin, most of the time when someone is breaking rules, you see there are other mistakes which are coming up there. When I look at the situation on the first set a row, it's a first row or column. Yeah, on the first scenario where someone is following rules, there is collectively fewer trades. I see 3 trades total, right?
Yes.
Three trades. One is winning, 2 are losing.
Okay? No. Two are winning and 2 are losing.
No. Look here. For the one that you're following the rules, looking at the screen, 1 is winning, 2 are losing, right?
No, one is winning and 1 is losing when you're following rules. When you're breaking rules, 1 is winning and 1 is losing. So the whole idea is you should strive more towards being at 1 and 2. Okay. Rather than being at 1 and 3. So the whole idea is not to win per se, but of great importance is to have rules in place and following them regardless of what the outcome would be.
Exactly.
So long as you have a structure in place, you'd want to follow that structure rather than being random. And of course, when you are random, when you don't have any structure in place, there are times when you'd be lucky to hit maybe a streak of profitable trades. It could be 1, it could be 2, or it could be more. So the bottom line is to try and stick towards being along the first row, along box 1 and 2, as opposed to 1 and 3. So it's more to do with following rules as opposed to winning all the time, because having rules would enable you to stick to the track. You're more likely to, long term, you're more likely to win, or you're more likely to grow your account when you're following rules, when you have rules in place and when you follow those rules, as opposed to a case where you are random, you're placing trades without any structure in place. So that's the whole idea. So some of the lessons that we can learn from this bias is that you don't have to be 100% certain when you're getting into a trade where the price will move or the amount of profit that you're going to make, because you cannot know how far the trade will extend. You cannot tell the outcome of the trade when you're getting into that trade. You can only, the best that you can do is to give that trade time to allow it to mature. As to whether it ends up in profit or in loss, of paramount importance is to ensure that before you get into that trade, you have checked all the boxes on the rules that you have set. Another lesson that we can learn is that outcome of one trade is independent from another. So each trade has its own merits. So every other opportunity is different. So you cannot rely on outcome of one trade to inform the decision as to whether you will take another opportunity or not. So long as you're following the process, then ideally you're on the right track. Then there's an element of randomness. So when you're getting into trades, you cannot tell whether you will have 5 winning trades and 5 losing trades, or whether indeed you will have the first 3 trades being winners and the next 5 trades being losers. So you cannot tell how the outcome of the trade will be in terms of whether that trade will be profitable or not. So trading is random, the outcome is random. So that being the case, it's therefore important to ensure that you have a process in place, you have a plan in place, and ensure every other time that you use that plan as your guide. Then lastly, long-term success in trading has a lot to do with identifying a well laid out plan. So as we always insist, you need to have a strategy or a plan in place, because if you do not have that, then it means that every other time it will be a guessing game. You cannot tell when or even which particular asset to trade. You'll actually be trading randomly without any structure or any solid justification. So that's the whole idea. So the essence here, or the emphasis here, is more to follow a well laid out structure as opposed to relying on the randomness of the trades. So yeah.
Maybe the thing that we would want to clarify here as we move to the next slide is which is the best trade? What do you say is the best trade? Is it a trade which is giving you profits, or a trade which has been executed based on steps which are well laid out? Maybe that's the question that we need to address. And
yeah, exactly. That's the bottom line, actually.
Exactly. Yeah. So the thing is, it's not, it doesn't have to be like profits all the time. And in one of our sessions, we speak about actually you're not focusing so much on the profits, but or on the money. You're looking so much and even more closely into the plan, right? So yeah, you might have a trade which is giving you profits, yeah, but it's not the best trade. Okay, it's not a good trade. Okay, and you might have a trade which is giving you losses, and it's a good trade because it's been executed based on rules, well laid out rules, and that's a trading strategy. So I think it's always good to have like there's this saying which gets around in trading whenever you have trading conversations, like plan your trade and trade your plan. I think exactly. that might be the right way to put it. So always with the trading plan, have it in hand and execute it. Might not be winning all the time, but the time it wins will give you profits. Okay. And I think the way to go is you have a set out way of doing things, so that every now and then you're able to consistently apply it throughout the trading. Eh?
Yes.
Exactly, following the rules. So I think on the next part now, we're looking at the comfort now and the discomfort. Okay. And this is what discerning between a trader and someone who has not actually learned being in the markets. This is where we say that you're learning these things on the real market, right?
Yes.
Yeah. The comfort. This is where we're talking about the life of a trade. And the life of a trade starts right from when you enter the trade and when you exit the trade. Okay. Yeah. So a lot of things happen in between there. The feelings come in, the comfort, discomfort, and it's where someone want to look at the likely behavior. Maybe Edwin, you want to shed more light on this short-term, long-term effect on the discomfort and comfort.
Yeah, and I'll do that by first posing a question to you.
Mm-hmm.
So think of a situation where you have placed a trade and set stop loss and take profit, and you're watching that trade and it is currently in loss, and the price seems to be heading towards hitting stop loss. What would you do, or how would you react?
It's always so tempting, especially when it depends with first of all, what I'm thinking about the trend. For example, I might have been very much confident about the trade and I'm waiting for it to pan out. Yeah. Where someone is so much confident that this one must give me something. So there's that temptation to start moving the stop loss, but that is the wrong practice, right? So
yeah,
there is always that temptation to start moving the stop loss, or maybe
in order to find that comfort, short-term comfort.
Exactly.
Or even to close the trade.
Yeah, even to close the trade, because now you think now it's going against you. So I think the best way, even with those feelings, of course, they will appear to any trader. But I think the best way is for me to wait for the stop loss to be hit, if it has to be hit. Because in the first place, I think in the first place, it should be at the best level where I believe if the trade hits the stop loss, then I've been protected. Or if it hits the stop loss, then I'm comfortable with what I'm losing. I'm comfortable
based on the technique that you use. Yeah,
exactly. So I think, just to answer you, I would rather sit on my hands and wait for the stop loss to do its work, and I'll be comfortable at that point. Right? But sometimes it's not so that easy, right?
Yeah, I tend to disagree with you. I believe most traders either adjust stop loss and push it further away, or even close that trade in order to enjoy that short-term comfort.
Especially when you have that setup that you feel it's really a good setup and I should be getting some money in this. Okay.
Yeah.
But most of the times they can be very surprising and can turn out to be losers.
Yeah, but you know, it doesn't necessarily mean that because the price is moving close to the stop loss that that trade will actually hit that stop loss. It might actually go just shy of that level where you've set your stop loss and reverse back and even have that trade breaking even and moving towards profitability.
By just very few pips, it's possible.
Yeah. So the whole idea, you might actually try to find, as a trader, you might try to find that short-term comfort to either close that trade or even adjust stop loss so that you can eliminate that sensation of discomfort. But it doesn't necessarily mean that the trade will close. So the long-term effect might be having you foregoing a trade which could have actually recovered and made you profit at the end of the day. So yeah, these are some of the psychological, how can I put it?
The scenarios,
that most traders encounter every other day. Another good example is a case where you're in a profitable trade, or you're in a winning trade. The trade is moving quite well. It's progressively, the profit is progressively increasing, but upon reaching a particular level, price has actually stalled and the price now seems to be retracing backwards. So again, in such a scenario, you may find that most traders tend to be very quick to close those trades in order to secure the little profit that they've made. But that could actually be a very short-term pullback before the price continues with the same direction. So the short-term comfort would be to have you close that trade with a small amount of profit, but that does not necessarily mean that the trade will lose you all the profit. As a matter of fact, it might be a case where a price is making a short-term pullback before it continues to shoot even higher and earn you more profit. Yeah. Yes.
Have you realized that this one happens most of the time with when someone is managing the trade with a trailing stop? Yeah.
Yeah. It's true.
It happens most of the times. So is it bad? You see, sometimes these things can happen randomly. Like most of the times I've been gotten out of a trade just because I tried to manage the trade by using a trailing stop, and you're out just before it progresses. So maybe the thing is sometimes you're gotten in these situations. You have a trailing stop, and before, of course, after getting into some profits, and of course, the trailing stop is moving in to close, right? Go to break even, and then all of a sudden it's hit and you're out. So I think, would you consider that one acceptable? To me, I think I would say yes. If the stop loss is hit, of course, the trailing stop is hit because I've been trying to manage the trade, then that is okay with me. Would you consider that one okay on your end?
Yeah, I'd consider it okay, because that is part of managing a running trade.
Exactly.
Yeah, it's not just a matter of getting a good opportunity. A lot goes into that regarding how well you manage that trade to maximize. I mean, we are all trying to maximize on a profitable trade as much as we can, and that would enable you to sort of be able to balance out instances where you've had losing trades. So the more you maximize profit, the better it is for you, because that would mean that your account would have a chance to grow quite fast.
All right. So then what you're saying, and what we can agree on, is that if this short-term discomfort is, if the scenarios appear to be like it's a short-term, it's getting out of a short-term, trying to save yourself from a short-term discomfort, if it's part of a strategy, like where you're managing the trade, then of course it's acceptable, because in this market, I mean, you can never be like 100% comfortable. There's always that feeling of well, you want to get into the profits, that feeling of a little bit of excitement, only that you have to control it. So if it's part of it, if it's part of the trading strategy, if it's part of the plan in managing the trade, then it's acceptable. Okay?
Yeah, you should be comfortable in that short-term discomfort.
Yeah, maybe a thing that a trader should be looking at is if, for example, you're using such type of trade management tools like a trailing stop, what point, how many points do you set out, so that you don't just move in to close the trade or to move the trailing stop at when the price has just gone past the entry. Maybe you might want to wait until it's just achieved like a third of the target, or maybe half of the target. That might be better, right?
Yeah.
Okay, all right, that would be better.
Yeah, mostly such sensations are mainly due to fear or anxiety.
Exactly.
And yet you could be in a very good trade, by the way.
And with now that you've mentioned, sorry for cutting you short, now that you've mentioned about the fear and the anxiety, maybe what is this? We can now address this aspect, or this thing that is causing the discomfort. Yeah, the things that cause discomfort in a trade that you would want even to not wait for the tools to work for you. I think it's all about breaking the rules on lot size use, on having maybe set the stop loss too close, having set the stop loss too far, right?
Yeah.
So if you make a mistake right from the entry, then the discomfort will set in automatically. Right?
Yeah, it's true. Yeah.
So it goes back to the rules, okay?
Yeah. It all boils down to the plan that you have in place and how well you follow those rules.
it all boils down to the rules. Of course, we know we're talking about the rules, talking about the trading strategy. So if someone wants to ease the discomfort, just pre-plan the trade. Know where you're comfortable. Know where you were free to leave the losses to run to. Okay, depending, of course, with the account size, and that one brings in the calculation of the lot size. Yeah, exactly. So I think I can touch on a few of the questions that we have from this end. And of course, we are really happy to have you here listening to us and engaging us on this end. Someone is asking about swaps. And although it's not part of this, but we can cover a little bit about the swaps. I think we can, huh? Yeah, so just to touch on lightly,
Yes. So swap is basically an overnight charge. So it's overnight interest that you'd accrue on a trade once you hold it overnight.
Exactly.
So the longer you hold the trade, the longer the higher the swap will be.
Yeah, depending with the financial instrument, of course.
Yeah.
Depending on the financial instrument. So it depends on the interest rate of the current of the financial instruments which you're holding long, right? Like for example, if you have a euro against the dollar and you are long, net long, euro dollar, and you're net long, of course, you know that you've bought euro and you're selling USD simultaneously. So depending if on the currency which has got a higher interest rate, then you are either, if you're holding the currency which has got a higher interest rate,
then you'd earn.
Then of course you would earn, because it's a net differential depending on the interest. It's something that we can cover. Something can cover another time. But of course, like you said, the longer you hold, of course, if it's a net negative, if you're the one who is paying, then of course, then you hold for some more several days, running over several days, then of course it's going to be multiplied over. That's on swaps. Then Henry is asking about leverage. Of course, asking about the 1:400. Yeah, for us we offer 1:400, but of course any trade is free to change. Okay, remember you set the risk for yourself, so you're free to change whether you'd want to have 1:100. But remember, the lower the leverage, then of course we need more capital to trade, because of course leverage is going to enable trade with a smaller capital. So of course we have set it to not a maximum of not more than 1:400, and that's when it's going. It benefits the traders who trade small capital on our end.
Yeah,
but it's really, someone can reduce it. How would you advise around that leverage setup, Edwin?
Regarding leverage, I'd be more concerned. I'd rather have a higher leverage and manage the position size of my trades, because for me, with a lower leverage, it means that you'd need to commit a lot of capital to your trades. So with a higher leverage, the utility of your capital is increased. So I'd rather have more leverage and manage my trades in terms of contract sizes.
Yeah. So quite a good approach. I agree with you. Quite a good approach, because again, you need to take advantage of the opportunity, and the opportunity is that you're able to use a small capital and trade with something which is of bigger value, right?
Yeah.
And of course, the leverage is the multiplier effect. Like, what percentage are you putting in to afford a full size, given size of financial instrument? If it's 1,000 units, then instead of you having the full amount, then you put like a 0.25% of it, and that's when you're having like 1:400. Nice one. Then another question is appearing. Someone is one of the attendees is asking, anytime that he puts a trade on oil, right? Immediately he puts a trade on oil, then it starts with a big negative just near at the entry. The question you want to ask yourself is, and of course, there's someone who responded, how big is the lot size which you are using at that point? Okay, if it's a big lot size, then of course you you're going to see a big negative right at the beginning. Okay.
Yeah. The lot size will determine the spread that you'd pay. So if the lot size is quite big, then it means that the cost would be also big.
Yeah. The multiplier effect plays.
Again, the volatility that is existing in the market would also affect the cost.
Okay. Yeah. Quite on point. And another question here, quite interesting. We explain how the signal center works.
We will dedicate a full session for that.
Yeah, I think it's something of interest, and I've seen that question another time. Would like to set out a full session where we can discuss about the signal center. It's an installer where, of course, it can help you know the sentiment in the market. For example, what is the general sentiment, maybe on a 1 hour time frame, or general sentiment on the markets, and that's where you can get a recommendation, right? Not like an advice to buy or sell, just a recommendation, so that
it's just a general sentiment.
General sentiment, so that exactly, if you get a sentiment that it's more of buying, or there's a bias to the upside, so of course you advise you get a sentiment to buy, but on your end you want to go and analyze and see, does it really favor my trading strategy to go long or go short? So I think, Edwin, we might want to plan and have that session, full one.
Yes, we will plan and have it soon.
Yeah, that would be awesome. And you don't want to miss that one. The question was coming from was it from Kevin? All right, yeah, we look at it at that time. So I don't think we have any new questions. Boniface, we look at the signal center. Thank you so much for that question. On the stop loss and trailing stop, it's something that we'll cover on the session where we'll be doing. Is it on the risk management, right?
Yes.
Risk management, and we're covering the securing the bag, or when you are using a trading strategy. Okay, but good questions coming in. We're proud of you guys. When you come in here and you're asking questions, we are happy that we are a great resource to you, and look forward to engage with you on these platforms, on our Facebook channel, on Twitter, of course, on the Instagram, LinkedIn, and here on YouTube. Really happy to engage with you. Edwin, anything to add on your end?
Nothing more to add.
Okay, all right, then
just to thank them for attending today's session.
Of course, we appreciate all of you, and keep the questions rolling. In case you have questions that have not been answered, or the session ends before we you throw in your questions, I mean, there's that email that they can share, right? education@fxpesa.com, and we'll always respond to you in person, to make sure you are well in terms of the concerns that you have. Up to that point, there being no more to discuss, of course, just requesting you to join us next time. Of course, tomorrow we're having an event with Shanti, right? And this time out it's going to be 5 p.m. Okay, it's not going to be at 8. It's going to be 5 p.m. right? Just a reminder. Join us at 5 tomorrow. We'll be one of our own Shanti discussing about the markets. And for us, we wrap the things there. Encourage you to check on your mindset, avoid the bias, wait up until the stop loss does its work, or the trailing stop, or the take profit. Thank you so much. Till next time. Bye.
See you on Wednesday.